right, good morning. Today is Tuesday, April 9th, and I just stumbled upon this trade right here. This is the US dollar Swiss franc chart, and let me outline this to you right now. I've got another new one for you as well, and I'm going to adjust the stock trade that we entered yesterday, align ALGN. But first, let's talk real quickly about the US dollar Swiss franc. Okay, as you can see, the trend is up. The market is pulled back. Look at this, right back to that 50 exponential moving average, right? That occurred, Friday, right here. Yesterday, look at this tiny, tiny, tiny little inside pattern right here. Look at that. Market's contracting. The energy is building up. And as you can see, the market's already penetrated up through that high. Okay, so it's taken out that high, and it's come down. It's trading right here. I just went long before I pressed the play button to record this. I went long at 93.50. 93.50. It's at 93.49 right now. My initial stop on this is below Friday's low of 93.12. I'm at 93.10. So I'm long at 93.50. All right, my stop is at 93.10. Can't write too well here. So look at my R. My risk is 40 pips on this trade. That's where I'm at. That's my current position in the US dollar Swiss franc. Again, this trade is based on the daily. If you look at the Fibonacci retracements from this low here, okay, and draw them up to this high. Look at this, 38.2 is right there, which was right at the high of the inside pattern. The 50 is down here. But in my estimation, if the market starts to break down and we take out Friday's low right here, I don't want to be in this trade anymore. So that's I'm risking 40 pips on that. The upside on this is much greater than what your initial catastrophe stop is. Okay, we're risking 40 pips. We're long at 93.50, right? We're looking for this market to come up and take out 94 and perhaps test this big bar's high right up in here. But we'll get to that tomorrow morning. I'll give you exact profit targets on this. Okay, tomorrow, so this video is not too long. I don't think we have anything to worry about for the market right now. If the market were to take out today's high and start to rally up, then you're going to want to be more concerned with that profit target. But I don't think we need to worry about it here until tomorrow morning. I'll revisit this trade, okay? Let's go to the trade that we put on yesterday, Align Technologies, ALGN. All right. Again, this is off of a daily chart. This is pretty classic trade setup. I mean, look at the market tested this low on this big bar down, right? It not only took out this prior low, but it took it out and it closed actually higher, and then we consolidated for 2 consecutive price bars. As you can see here, the energy's building in here. We bought yesterday as the market penetrated up through the high here, right? Yesterday it took it out. We went long yesterday at 31.31 with an initial stop at 30.44. Okay, right below this low. Because again, the market's going to take out the high and I'm long. If the market were to reverse in that same day and take out the low, I don't want to be there, especially on the day of entry, okay? Now, as you can see, the market rallied yesterday to 31.75 and even further today. Look at 31.98, but we're trading definitely down off those highs. So what I've done is this. Since today has taken out yesterday's high, okay, I'm going to move that stop up to below yesterday's low of 31.05 is the low. I'm at 30.95 right now. So remember, when I first put this trade on, we were risking 87 cents. Right, 87 cents. Now, since we moved that stop from here up to below yesterday's low by 10 cents, we go from 87 cent risk to, look at this, a 36 cent risk. Okay, Makes sense? So we're risking 36 cents on that. Our first profit target is up at 32.18. 32.18. All right, 32.18. Missed it by 20 cents today. Right, missed it by 20 cents. But again, we're risking 36 cents on this trade. So we're not risking a whole lot. We cut our initial catastrophe stop by over 50%. Right? Let's take a look at another currency pair that is setting up, but it hasn't set up just quite yet. Look at this one. British pound, US dollar. The market has, look at both on the, look at the daily's been down for quite a while, right? Remember when it changed down right up in here, right? That was at the beginning of this year, January. It changed from green, right, to red right in here. It's been down ever since. Okay, look at this now. First time back to the 50 exponential moving average, right? And look at what's happening. So Friday had a rather big bar to the upside. Yesterday, we had an inside pattern, right? Lower high, higher low, and then today, so far, the high is trading below yesterday's high and the low is trading above yesterday's low. So we're starting to contract. So I'm keeping an eye on this. Okay. We're looking to go short, of course, right? This is down on the daily, and if you were to look on a weekly, that is also down. Let's take a look at the weekly. Right, we're also down there. We took out these lows. I drew this horizontal line so you could see all these lows. I'm going to get my red pen here and show you what I'm looking at. See, took out this. Look at a lot of equal lows. I'm much more in favor of horizontal support than actual trend lines slamming. Okay, so look at low, low. Marginally took it out, and bounced, right? We had a trading range here pretty much, right? Up, down, failed at this low, came back up, took out this high marginally, came back down, marginal new low, bounced back up, matched that high, came down, took out that high there, and then came down. And look at the penetration down through these lows on this move is telling me that this is a real trend to the downside after consolidating for many months. And here we've broken down. As you can see, we're starting to pull up. And then if we flip it quickly back to the daily chart here, we are in an area where we could be looking to sell this market. But again, not yet, because today's not over. We're trading closer to the high of this range than the low. But I would be willing to sell if the market were to reverse today down through today's intraday low of 152.49 to 152.47. If the market takes out today's intraday low by 2 pips, I'm looking to go short, okay, with an initial stop loss above today's intraday high, whatever that is. And so far, right now, it's 153.24. So I'd go 2 pips above the high of the intraday high. So far it's 152.53, so it'd be 152.55. So again, this is a long video. Hope that helps. Have a profitable day, and I'll be back with you tomorrow. Bye for now.